You're going to self-manage on a bigger units because, like I said, just more employees and more tenants.
Interesting. That's some good insight because a lot of people, I mean, it's like any journey in life, but also especially the investing journey, I find everyone starts off small. There's some people out there that say, you start big. Like I know Cardone's always saying, go big, go big, go big. But it's like, you just can't start there. You got to start small. You got to understand, you got to build your foundation. You got to understand the ins and the outs in order to even get to that level. Because like you said, otherwise, if you don't know what you're doing and you just start big, you're going to get taken advantage of. It's just the way the world works. And you got to cover your own butt in order to make sure, each line is taken care of in the spreadsheet. Otherwise you're not able to stack and rack, right, Sofia?
Mm-hmm. Exactly. Yeah, and you know what? That was something, we had the money. I could have started extremely big like we did in 2003. And look where we ended up, almost being in foreclosure, losing all of our life savings, losing our business that we had worked so hard for. So it's not about just because you have the money. I don't care how much money you have. If you don't have the knowledge and you have never been in that industry, you're going to fail. Mm-hmm. I mean, it's just logic. It's like you can't jump, there's a ladder, and you're not going to tell me that you're going to go from here and just skip all the steps and that you're going to reach the ladder on the top successfully. I'm sorry, you need those building blocks in order to get there. And every little detail, every small little lesson, I don't care how small it is, it's a lesson that helps you be able to build a concrete empire instead of a sand empire. Because you could build it, but it's going to collapse. I don't, and it's not that I'm wishing, no, it's just facts, guys. You have to learn every little inch of a business in order to build a concrete wall.
Cool. And I know you and Bobby are both, honestly, you guys are both genuine people. Bobby helped me out a lot and gave me some direction too. You guys are very into the social media, and you guys are getting out there, you're building your brand, and you're giving a lot of great value and educating people on real estate. And I know I've seen your videos on your Instagram pages and stuff. So what exactly are you, I guess, helping or telling new investors these days? Like, where should they start? What should they look at? Like, what type of things do you see people struggling with, I guess, when they approach you?
So the main one I tell you is stacking up cash. I get a lot of DMs. I get a lot of people asking me, can I start into real estate with, $5,000, $10,000? Guys, I know there's a lot of people out there that sell these programs, go into real estate with zero down, use other people's money. That is for me, we've never done it. I never will do it. And I would never advise anybody else to do it. Stacking up and learn. Meanwhile that you're stacking, you've got to grow a knowledge. So you have to go stacking, learn whatever real estate you want, because there's a lot of people that want to do flips. There's a lot of people that want to buy houses and do like Airbnb. There's a lot of people that want to, be in the rental business and get cash flow. Whatever, warehouses, commercial, whatever industry you want, learn them. They're all different. So for example, me with multifamily, I only know multifamily. I have never been involved with storage spaces. I've never been involved with retails. I've never been involved with hotels. So if they ask me any of this, I'm like, guys, I could give you a little bit of knowledge because real estate is real estate, but I can't give you the knowledge of that specific lane that you want to go into. So learn whatever lane you want to. Get all the knowledge. There's so much free information on Google, on YouTube to learn whatever you want. But stacking, guys, stacking. When you buy a building, I don't care if you buy a building for 5% down, which doesn't exist, but whatever. There's a lot of people out there that say it does. That's up to them. If you want to buy a building with 5% down, they don't think about closing costs. They don't think about your insurance. They don't think about the first day that you step into that property, a window could break, a leak can happen, anything could happen. So you need to have a reserve just in case anything happens. Your mortgage payment could come due and your tenants didn't pay you. Now what do you do to pay that mortgage payment, right? So there's little things that can happen. So my biggest advice to anybody in there that wants to get involved in real estate is Stack your money and rack all the knowledge you can get in the area that you want. Extremely number one before anything else. That's my first advice to anybody.
110%. And also to go a step deeper, I find is you can't stack and rack unless you have control and you really understand your own finances. So if you can't control yourself and really understand what's coming in, what's coming out, where things are delegating, and really take that accounting approach in yourself, and if you can't do that, then you can't operate a real estate investment, and you can't dare ask anyone else to invest with you and other people's money. And I invest with other people's money, and I do deals. I have experience in that. Like if you're just starting out that way, I highly caution you don't do that, because like you said, you got to learn. But it all starts with control and learning the foundations. And if you can't control your finances in and out, you can't stack anyway. So I think the biggest thing, it comes down to self-discipline and your ability to actually stack. Because I feel, Sofia, a lot of people in my world and first responders, I mean, it is like the funniest thing. Every single person who starts this job, as soon as they get that paycheck or that first pay bump, they're out and they're buying like the most expensive car, the nicest truck, or, they're just blowing it. So if you're out there and you're just thinking about doing that, think twice. And like you said, make sure you're stacking and racking, make sure you have control of your finances, what's coming in and what's coming out. Because like you said, that is really, really, truly is the starting point right there, your ability to stack and rack.
100%. And if anybody, like I said, Bobby and myself, we worked 2-3 jobs at the very beginning just to start stacking and stacking. So we knew, and we would sacrifice a whole lot. Even today, guys, I know everybody says, oh my God, you guys are millionaires or this. We stack like you cannot imagine, because money or a business could go down at any time. We're not invincible. We're human beings. You could lose. I mean, of course we're not. We're very focused on not losing that. We have a generational image in our head that we've already started creating for 100 years. Literally, we have a 100-year plan for our general. But people out there, even in our level, they go out there and they think, let's go buy everything and let's go spend. Guys, that's not everything. Like for us, not for us at least. We live right now. I'm at the Bahamas for a month. Yes, I could do that. Busted our butts for many years, and we have stacked that. Now, one of our expenses on our finances is vacations. We stack just for vacations, and we could go take vacations whenever we want, because we learned how to finance for a win, not for a failure. So going to buy these stupid little things that you think that is to show people, oh, look what I have. Don't do it until you don't have it. And I tell everybody, another thing I tell everybody too, don't go buy yourself a personal home until you have not made it. Get that money that you're going to spend on a personal home and go invest it in a property, on a business that's going to make you money. Because a home, all it does is that you throw the money into a garbage can. You're not getting nothing in return. People think, because I'm going to make millions of dollars if I hold my house for 20 years. Guys, think about the money that you spend on your mortgage, on your taxes, on your insurance, on your repairs, on anything you do on your house. It's all going into a garbage can, where if you get all that money that you have, the down payment, the money you're going to spend monthly on your mortgage, stack that and go buy yourself a business, a real estate business, whatever. Me, real estate, because I think real estate is the best business in the world, because you get cash flow on a monthly basis. You could go away on vacation and it's still bringing you in money. So I love it. But whatever it is, until you're not made it, until you don't have a certain money of levels, go rent, guys. Rent, and save all your money to go buy yourself a real estate investment or a business. But that's another thing that people do too, and I think it's nonsense, but you can't. They raise themselves with that American dream. It's the American dream. It's not an American dream. It's, a pit. And I own a home, so I'm not to be a hypocrite. But again, I own a home now that, we've made it to a certain level, and we're like, okay, now we can afford to, have that home there and not worry about it,
Now, there's always two sides of that debate, and it's, forced savings, it's your ability to save, and, you're only saving, I guess, half of that because half of it you're paying interest, but, the appreciation, the principal pay down, but you're not being paid, so you're actually paying to live there. So I get that. And if you're willing to focus and build that, portfolio or whatever it is, then renting, I still, and I rent where I live. And it's just one of those things where it's tough to have that conversation because it's built into your DNA as a young kid.
It's a DNA. I mean, and it's such a wrong conception of, if they only understood, if you have $25,000 to put as a down payment and you're going to spend in $10,000, let's say, or whatever, $5,000 in expenses a month on that house, because it's not only your mortgage. People have to understand you have landscaping, if you have a pool, if you have little maintenance things that you need to fix in the house, all those monthly expenses add up. So save that monthly expenses, put it in your stack account, so that in a year you're able to have a nice little stack to go then rack,
Yeah.
So, but it's hard to explain that to people that don't have the mindset of an entrepreneur. They just don't get it.
Yeah, and especially where people live too, the appreciation's gone so high, so that they've been riding this like pretty sweet wave for so long that that's their argument. It's like. But
you know what, David? I challenge them.
Yeah.
I do a 10-year workout. I've done this for many people. Get the cost of the house that you put your down payment. Get your insurance money, your property taxes, and a 10% expense for reserves, and your landscaping, your electric, all that stuff. Do it for 10 years. And then increase the value of your house by 3% every year. 3%. You're going to see that you're still not winning. You've spent more money in the 10 years.
Yeah.
And you've gained on your value of your property. But you think that you got money because at the closing, you're getting back that down payment that you put in your house, right? Or the increase of value. But your expenses, you had spent that already. So you're just getting all that money back that you spent. So if people understand that grid, they'll say, oh, wow. But a lot of people don't do that,
Yeah. No, I know. I agree. Like I said, it depends on what the appreciation is. People are so used to like 10% or more a year, but it's like the average, if you look in the last 80 years, I keep talking, it's like 3 to 5%. So depending on where, maybe downtown's a little heavier, but anyway, I agree. I'm in the mindset because I'm always building and growing. So, you don't have to talk me into that one.
I love it.
Cool. All right. Well, I appreciate you coming on. And honestly, before we sign off, just let people know where they can get a hold of you or where they can follow you.
Yes. So my Instagram is at official Sofia Castro. And on LinkedIn, it's just Sofia Castro. My Facebook is not up yet, guys, because I'm not a huge social media person. I'm doing it because I want to give back, and I really enjoy, giving my knowledge, and I want everybody else to be able to do this and know that they could do it. But my Facebook is coming soon. They're already opening it. It's going to be Sofia Castro also. Instagram right now and LinkedIn are my two social media handles that I do.
Cool. And I really do like what you guys are doing. Like, you guys aren't selling nothing. You're just giving, and you're coming from a good place because you guys have gotten to a certain point where you can. So I love that turnaround. One last thing I never asked. What are you guys focusing on now? What are you looking forward to building or growing the portfolio, or like, what are you focusing on?
Oh, yes.
Weird place right now.
Yeah, so we're growing the portfolio. That's our strict focus right now. We just purchased a property in El Paso, Texas. It was a 400 unit property. We're actually under contract with a property that's about 236 unit that we should be closing in about probably 60 days, I would say we'll be closing. So yeah, our big focus right now is strictly just growing our portfolio in the real estate rental property cash flow business.
Awesome. Love it. Well, like I said, say hi to Bobby, and thank you, Castro family. You guys are genuine people and always putting out great stuff. So I appreciate coming on, and hopefully this will help other people in my community as well.
Yes. And if you guys have any questions about real estate,